Nathan Bell from Peters McGregor. We might get to what it's going to do to some of the domestic players in a minute, but firstly, your thoughts on the decision itself to buy Whole Foods did seem to surprise a few in the market, considering where they both sit on the cost curve. You got Amazon super cheap, Whole Foods, well, it's a whole nother situation, rather expensive.
Yeah, for anyone who's shopped at Whole Foods in America, yes, it is a bit more of an exclusive place to buy your groceries, but to me the value is in online grocery delivery. And if you can think about what Amazon offers through its Prime membership at the moment, so this is Amazon Prime, you pay around $100 a year and you get free delivery for whatever it is you buy throughout the year. Now the question becomes, what does Amazon charge potentially for an online grocery service? But if you can imagine that whatever that revenue is, that comes straight to the bottom line for Amazon, and then they've got this wonderful delivery business that all of a sudden doesn't have to have vans going all over different parts of the city. You know, so many more drop-offs in local areas, and along with technology these days, they can come up with a plan to greatly reduce the cost of delivering those packages. So people have already got no incentive to shop anywhere else other than on Amazon because of Prime membership, and groceries was really the one area that was left to go, and it looks like that loop, excuse me, it's been closed.
And I mean, also a view, because Amazon Fresh has been around in the US for a while without getting an awful lot of traction. I mean, there's an admission as well by Amazon that they do need that bricks and mortar. People like to be able to actually look and hold and feel, if you like, fruit and veg.
Yeah, I think there's definitely some truth to that. Now, you probably know that the Amazon stores don't actually have people providing a bit of service on the way out. You do it all on your own, and hopefully you don't have to talk to anyone in there. You just grab your stuff and walk straight out, and it rings up the purchase, and it's all done automatically. So there's obviously going to be some cost benefits in that business, but it still is bricks and mortar retailer, and this is a big move for a technology company, or supposedly a technology company, and they're going to have to deal with all the same restraints, the rents and whatever else, and it is extremely competitive. So this is by no means an absolute guaranteed great buy, but I wouldn't be surprised if Whole Foods still gets another bid, given how much damage this could potentially do to the other existing grocery incumbents.
Yeah, just on that, obviously a lot of focus suddenly turned to Walmart. I mean, these two behemoths have been circling each other for a fair while and really coming head-to-head in a number of different sort of segments of that retail environment. This is a big step into their world, isn't it?
Yeah, huge. And I think if you look through history, when something really upsets the industry, it's usually not the incumbents that come through with the better business, and Walmart has been struggling against this tide for quite a while. So I'd actually be thinking more that Amazon is the company that's going to come out on top eventually. But in terms of what this means for Australia, Amazon just doesn't have the delivery infrastructure here just yet. So I think they'll try and get a working, functioning model in the US before they go anywhere else.
And just in regards to what it potentially signifies for Amazon, I was interested to note that this is their largest acquisition by quite some way. The previous one was under $1 billion, so $13.5 billion is a big step up. Do you get the sense that we could see more large-scale acquisitions by Bezos and Amazon? Because previously they'd preferred to kind of grow everything themselves.
Yeah, anything's possible, but I think if you look at Whole Foods has been around for a long time, and just to get as far as it got, has taken up a lot of capital and time. And so if Amazon was going to try and replicate that, you've got to try and find the sites, you've got to find the new customers, and I think you talked about before about what they're doing with Amazon Fresh. There's no guarantees that was going to take off, and they probably realised just how difficult it really is. So essentially they cut right through that by buying a business that has been struggling recently, but it is profitable.
Nathan, I imagine, we've been talking about Amazon now for a number of months, always seemingly talking about the likes of Apple and Alphabet. Should people be actively considering buying these now? I mean, they've had a good run. I appreciate the last few sessions. Obviously, we've seen a little bit of a reversal in terms of tech stocks, but people see I think Amazon hit 1,000 before falling back in pretty eye-watering levels. But is there value amongst some of these big-name tech stocks at the moment?
Yeah, it's a good question, and we have arguments and have been arguing for a long time internally about whether we should own Amazon or not, and we don't currently. But any time we sit down and we put the financial model together, we have to make big assumptions about profit margins in the retail industry in the future. And if you look at retail historically, it's been very low margin. Everything seems to be going even lower margin. And so it's very hard to put high profit margins in for these retailers, especially with a company like Amazon, which is what you need to do to get that big valuation to justify buying today. But the problem is you just don't know what Amazon's going to do over the next 5 or 10 years. But we're just not prepared to take that leap of faith to invest today. But I'm sure there is some price for us. I'm just not sure what it is.
Interestingly, though, I imagine less risk, because you guys quite like the idea of Latin America, potential opportunities in Latin America.
Yeah, there's one company in particular, and I'd say Latin America is not normally a place to go to for investing. It's notoriously risky. Governance is terrible, and a bit like Russia, oftentimes people go missing, company executives, and money tends to go missing. But this company is the Latin American operations of the Liberty Empire. This is John Malone's cable and internet empire. And it's really been sold down very heavily. The nickname of the company is Lilac, L-A-C, you'll find it. But this is a business where in Latin America, internet penetration rates are only in the mid-20s versus high 50s or 60s even, or higher in the West. So huge growth in front of it, but it's a bit of an orphan stock now because it was hived off from its much bigger parent company. And so people have lost interest with it. It looks like they overpaid for an acquisition last year. It's really just been completely written off by the market. So it trades around $20 US. It's listed in America. We think it's at least worth 30, if not 40. So we actually think it's a really interesting opportunity, and it's run by Western management, which is the reason we're there. We feel like we've got trustworthy people running this Latin American business.
Brilliant. Want to take a look at Nathan Bell. Appreciate it. Thank you.
Thanks, James.